Guys, we've gone all the way back to the 4th of March, which is pretty much as far back as our data allows us to go. We've been going through the month, and I'm going to assess some entry points on this, and we're going to go for the examples and see how this month performed. So, we've gone up to our next entry point. So, usually everyone wakes up around 6 o'clock. So, let me just move back one. That's 6 o'clock. That's when everyone usually wakes up. 6 o'clock on this bar here, and I'm just going to scroll forward. So at 6 o'clock, we're then looking at our checklist once again. Step 1 and step 2. Is the market ready for us to trade? I would definitely say yes, purely because the standard deviation is pretty much been this is at pretty much the lowest point it's been at in the past 3 days. So the market is ready for us to trade. The Bollinger's have pinched for some time now, and we're then moving on to the next hour because we can't see anything from the MACD at the moment. So moving to the next hour, 7 o'clock, the market went up during this hour. So from 7 to 8 it went up in this hour, and we had definitely got something from the MACD. We can see a definite a buy signal from there. It's like the blue line was slightly below the red. It's now crossed above and diverging away from the red. I hope you can see that just to the right of the cursor here. So at 8 o'clock we'll be looking to get into this market. Now I'm going to give some figures to you of what our entry prices were and so on. So we'll be entering at the close of this price. Right, sorry. Once again, okay, so we're getting a buy signal from the MACD. We then need to look at momentum volatility. So momentum over the past 2 hours has been going slightly upwards, which satisfies what the MACD is telling us. Is the momentum is not telling us that it's going downwards. Volatility at this current time, which is just where the cursor is at the moment, is way below the previous peak, which is up above here at this point here. So, sorry, as I was where I was before, the point at which we would enter would be a price which is the close price on this bar at 14052. So that's 14052. So we're hoping that the market does go in our favor. Also, another point to mention is that as we're entering above the MA20 here, so as our stop loss, our mental stop loss would be on the MA20. So the next bar has gone in our favor. Some figures on this. We opened at 14052 or 51 on this occasion. It went to a highest of 14089, so that's 38 points or so there, but it hasn't met any of our criteria for exiting the trade, so we still be into this and seeing where we went. So scrolling to the right, we can see that the MACD is still diverging away, momentum is definitely going upwards, and volatility is increasing for us. Next bar, right. Another point on the 8 o'clock bar is it did actually go down, and if we had a physical stop loss implemented, we would have been stopped out rather than making any profit. So again, another advantage of not having a physical stop loss implemented, and really why the strategy it works if you follow it. So you would have been stopped out here, and also if you take a look at the 9 o'clock bar here, you would see that you would have been stopped out if you had a physical stop loss there as well. So it's good we didn't close out of our trades during the hour, as within the hour it went back in our favor. So even though we're in slightly less profit at the close of 9 o'clock, still our exiting has not been, the exit of the strategy is still not being satisfied. So we're still in this trade. Moving on to the next hour, the market has gone upwards back in our favor. So it's still not 30 points past the Bollinger, so we're in profit, but still not exiting. Next hour we're moving on to, and that's still gone upwards slightly, but still nothing has been satisfied. So moving on to the next hour once again, and it still hasn't done anything on this. So we're still waiting for the next bar, as none of our exit part of our strategy has been the criteria has not been met. So scrolling over to the next hour, right, we had a massive bar go in our favor on this one. And looking back at our figures, where do we enter, where do we exit?
14051.
We entered at 14051. It closed at 14136. So we haven't met our limit of 100 points just yet, but we're 20 to 30 points past the Bollinger Band, so we'll be definitely looking to secure some profit and seeing if the market continue to go upwards or not. So at this current moment in time, we are around 80 points in profit. Marcus, do you agree with that? Yep. 80, 85 or so?
Yep.
So we'll be securing at least 60 to 70 points of these. So with that stop loss now implemented, a physical stop loss securing that much a profit, we're going to see what happened on the next bar. Right, so if we secured 70 points on profit, we would have been definitely knocked out. Even if we had secured 60 points, we would have been knocked out on this. So let's say on this occasion we made 70 points in profit, and that's a good trade, I would say. Right, so after our profitable trade on the 4th of March, we're on to the 5th of March now at 6 o'clock, which is this bar here. Assessing if the market is ready for us to trade or not. Not at this moment in time. The standard deviation is at 28. Around this, on this pinch that we entered here, standard deviation is at 26. It did continue to go slightly lower, but we entered at the standard deviation of 26. So we're waiting for the market to really the Bollingers to converge a little bit more and the standard deviation to fall slightly less. Sorry, I just realized my cursor was all over the place on that recording. So we're looking at 6 o'clock bar on this day, and standard deviation is at 28. Now we're looking at the previous standard deviation when we entered the trade. It was at 26. So we're looking at standard deviation where the cursor is at the moment, and we're looking for the market to the standard deviation to fall at least a little bit less, to at least 26, for us to assess if the market is ready for us to trade or not. So just scrolling to the right, the standard deviation has now fallen to 26. We can now assess that the market is ready for us to trade. So the Bollingers have pinched enough, the standard deviation is low enough. We're then looking at the MACD. Now from the MACD we can see that we're not getting any signal from it as of yet. We're now going to scroll to the right to see what the next thing, what the MACD is going to tell us to do. Right, so the market did move up in this hour from 8 o'clock, but really this MACD signal is not giving me anything conclusive. It looks like it's a slight smidgen above the red line, and really that's not a good enough buy signal for me to act upon. So I'm waiting still for a little bit more confirmation. If the market moves still upwards, then maybe on the next hour I'll be looking to get in after that hour is closed. So moving on to the next bar, it moved downwards, but yet still on this bar here we're still not getting a clear sell signal on this one, so I'll still stay away from this at the moment. But if it does continue going downwards on this occasion now, and the MACD gives us a clearer sell signal, we'll be entering on this one. So the next hour we can see a clear divergence on the MACD, which has crossed from above to below and is diverging away from the red. And from this we're assessing if we're going to sell short. The momentum over the past hour, however, has been going slightly upwards, so we wouldn't be entering on this trade going short. Now the next hour definitely does support us going short, and so on this hour we would be selling short. Firstly, before we go into that, we got to look to see the MACD is giving us a sell signal, momentum is going down, but is the volatility too high at this moment in time? Right, so the volatility, it looks as though it is fairly high, and it is really close to a previous peak on the 4th of March. So just looking at where the cursor is, the horizontal line across there, it draws that is close to this peak over here on volatility. And so I'd be very wary on getting into this trade, and I would personally stay out, purely because the market, well, it's gone up and then came massively down. It looks as though it could be a sideways market. So let's see what happened in the trade and go on to the next day, hopefully to get a better signal from the market. Right. Well, we can see that there was scope for profit on this, but on the hourly on the hourly scenario, we would only be roughly around 13 points in profit at this point. So it's not a massive points that we missed out on, and the volatility has increased a fair bit. So the Bollingers have started to spread apart here, and the standard deviation increase. So it doesn't look like we're going to get a signal from the MACD on this occasion. So moving on to 6 o'clock on the next day.